Gold has been the most hesitant bull market of 2019 in my opinion. This is Asia Gold 4, trades during the Asia sessions in the 200K portfolio. Two nice winners in a row. You see this trade right here, this trade last night. Interesting price action yesterday at FOMC. Initially sold off pretty hard and then it bounced back. And stocks and gold were both up yesterday, so one had to be wrong, and it looks like it's stocks because gold is up again today, and stocks are just getting started on their selling. And so the Nasdaq I showed down 49, S&P down about 23, and gold I anticipate a move back to the highs of the year, which is up here in at the beginning of September, 1560 area. Very hesitant. 2 months here of just consolidation at lower levels, wide range. We saw this also in June. From June and July, it did the same thing. And so very, very choppy bull market. And it's been the most hesitant bull of the year, in my opinion. And I would anticipate much higher prices in gold, up above 1550 to 1600 or higher. Based on this price action, we saw this move in June, nice blow-off move in June, and then July sideways, and nice up move, and then in September, October, just a pullback, a long pullback. So it's very slow. It's a very slow-moving bull market right now, and look for it to get going into the end of the year based on some cumulative price action that we've seen in the market. And so we're due some moves higher, in my opinion, based on what I've seen technically. And Asia Gold 4 is one of those strategies that captures long-only trades in the gold markets in our 200K portfolio. Here is an equity curve. It can have some steep drawdowns, so it's more for a larger account. But this equity curve is cyclical, so you could treat this equity curve with technical analysis, kind of like a money management algorithm, and use this recent low in the equity peak in the equity curve as a stop loss in anticipation of higher prices in gold and a move up in this equity peak. So I want to try to catch this type of move. It's been choppy in gold in recent years, and so looking for more upside in gold and more of this kind of price action in the equity curve. And so we'll see if it plays out. It could be wrong. And like in trading, everything else in trading, there's some risk, and so you can measure your risk, and you could put your stop loss in on this strategy just below this number or below this number. Here are the statistics. This is with slippage and commission, so you can see it has $11,000 drawdown. It's a gold strategy, holds trades overnight, and we're at the lower end of that drawdown curve, and so you're not getting in at the equity peak, so the risk to worst case drawdown is less. And so you don't have to risk that full 11,000. But this is one of the strategies. If you'll watch gold trades at night. We sent out a video earlier about our market depth indicator, and this strategy was completely. It doesn't look at the market depth data. There is no historical market depth data that you can test with on a strategy like this, but it was in line with this strategy. And so nice, strong move in gold confirms what we believe about gold. So if you're a gold bull, want to trade alongside of gold, this is one way to do it. The other way is with our market depth indicator that we talked about this morning.